Hello, hello.
Hello. A very warm welcome to the second Investor Awareness webinar conducted jointly by IDBI Bank and our wholly owned subsidiary, IDBI Capital Market and Securities Limited. We have been doing this session now for almost 2 years, and we appreciate the participation of our customers in this. Before starting the webinar, I have a humble request to you all. Kindly keep your video and audio in mute. That will help us to conduct the webinar seamlessly. At the end of the webinar, as usual, we will be having a question answer session open to all the participants. We would request you can keep, raising your queries in the chat while the presentation is being given. And at the end of the session, we will be addressing all your queries. So again, a humble request, please keep your audio and video in the mute condition so that we have these disturbances during the session. I would warmly welcome Mr. Pravin Bokade, Head of Research of IDBI Capital Market and Securities Limited. He has an extensive experience of research in this field. And in this tumultuous time where the market is really, making us worry at most of the days, like where to invest and what to do in future with our already invested funds, he would be guiding us through the global as well as the national economic perspective, the stock market trends, and also we would be getting insightful advices from him. However, all investments are subject to risk. So we would request the investors to have their own analysis before taking any future call. So over to you, Mr. Pravin.
Shamili ma'am, and thanks everyone for joining today's webinar. A warm welcome to you all. So as usual, we will start our webinar with the headline. It's called my headline of my presentation today is markets awaiting fresh triggers. The what is the logic behind this headline is that we have been seeing that the market has gone up, and then currently barring few segments like the banking, etc., market is directionless. Sometimes the market goes up, sometimes it goes down. There is no clear trend in the market right now. So we will explore what are the factors that affect the market. So let's begin. As usual, I will talk about the global economy and then global market. Why global market is important at the current stage is that whatever happening in the global market that affects India. Of course, the Indian events are also important, but global geopolitics, global economic landscape, and then global import duties that has been uh, pronounced by Trump administration that are affecting most of the markets globally. So global market becomes very important for us to understand what exactly is happening and its implications on Indian market. So over the last 1 month, there have been a lot of uh, talk about the import duties levied by Trump, and then market was very volatile since April 2nd when the he imposed import duties on most of the countries, prominently on China. But since then, the rising bond yields and then the declining markets have uh, forced him to change his stance. So there has been some kind of patch up between the US and China that so that US will reduce its import duties on China from 145% to now 30%, which is effective May 14. Similarly, China is reducing its import duties on US goods from 125% to 10%. But despite all the talk about the animosity and then rising import duties and then whatnot from the Trump administration, both the countries sat together and they negotiated a deal. And now they are almost close to a deal. But again, that deal is for the 90-day. So window is for 90 day, but I guess this they will solve the import duties rate during this period. So overall, barring a few exceptions, I guess the China and US import duties narrative has been in the uh, this won't create any problem for the market going ahead. That is the narrative that has been discussed till now. On the other hand, US has also signed trade agreement with UK. Trump announced in his tweet just 2 weeks back. So he said that it has been a historic agreement between both the countries. Similarly, recently Trump was in Middle East and then he signed trade deals with Saudi Arabia. As usual, his focus is on investment in US from the various countries. Last month it was Japan SoftBank who invested large amount in USA. Not invested, plan to invest. Similarly, Trump secured 600 billion worth of investment from Saudi Arabia and from other Middle Eastern countries as well. So US is planning to have a similar agreement with India as well. India, on the other hand, is planning to have bilateral agreements with the UK, US, India, Oman is also on the pipeline. Probably in the next few months, we should be able to see closure of the India, Oman, and India, Middle Eastern countries agreements should get close. Similarly, on the positive side, Russia-Ukraine conflict may ease temporarily. Both the countries are probably meeting this weekend or so. We'll have to see how it goes. So overall, what we have seen is that the economic impact of all these negotiations on the import duties, on the geopolitical front, tension is slightly going down globally. But what is the market? What affects the market? So just moving to the next slide. Last slide was about the positive things. This slide and next few slides are about the risk factors. What impact the market? So the most important factor during the geopolitical events is the bond yield. 10-year to 30-year bond yield, they give us a clear picture about the direction of the economy and the market. In the equity market also, bond market is very important. So we have seen that in the last 15 days or so, bond market has been volatile. I'm talking about the US bond market. US bond market has been very, very volatile. Despite the inflation easing down, US inflation was at just 2.3% in April, which was the slowest annual increase in last 4 years. So despite that, the bond yield has increased from almost around 4.2 to now 4.53%. No, in last 2 days, it has come down to around 4.45, 4.47. So overall, it's around 4.5%. When your inflation is going down and is at a comfortable level, Fed wanted inflation to be around 2%. And now inflation rate is around 2.3%. But despite that, the bond yield are rising. That is a worrisome factor for the US economy. Why the bond yields, why the bond yields are rising? Because US has a large debt on its balance sheet. US has a debt of almost $37 trillion. We always talk about this debt in our webinar. Why? Because it will play a spoil sport in the market going ahead. Not immediately, but over the next 6 months to 1 year, it will impact dramatically to the market. That is why we have to track this US debt and US bond yield and US ability to service debt. Okay, what happened, because of this debt, yesterday, Moody's has downgraded US rating for the first time in its history from AAA to AA1. Why they have downgraded US rating? Because of the debt risk and then geopolitical issues. So basically, the Moody's is not able to comprehend whether US is able to service its debt. That's why in its history, they have downgraded the US rating. We can imagine the downgrade in some emerging market or in some Latin American market. We can imagine that, and we have seen in history as well. But this is the first time the Moody's has downgraded US rating. That's a big negative for the US economy overall. So despite all these efforts to calm yields, to reduce yields, they keep on rising. So that shows that something is wrong with the US economy and US markets. If the yields keep on rising, if the yields keep on firming up, if they don't even rise, if they stabilize at around 4.4, 4.5%, that is still a big negative for the US market. It is not necessary that US yield should rise further for it to become a negative. No, yield anywhere between 4.2 to 4.5% is itself is negative for the market. So I'm talking about the long term. In the short term, market may see a lot of volatility. Market may go up, may go down, but in the long term, that is negative for the market. So as the Trump administration announced some deals, the rate cut is getting priced out. Of that is giving Fed the reason not to cut rate further. Okay. Uh, so we believe the bond market could be Trump's top economic priority going ahead, and then how to tackle this debt issue, how to repay the debt. Almost $9 trillion worth of debt is getting repriced in the next 1 year. How to fund that debt is again an issue for the US market. And despite the trade negotiations and then higher yield, US dollar should have strengthened, but no, US dollar has resumed its broad-based decline, which indicates that the global investors probably are concerned about the ability of the US to get it in order. So, if the global investors are concerned how the US is going to fund its debt, that will be a problem for the US market. So in the next slide, I am discussing about the other economies where yield is rising. So it's not only the US where the yield is rising. It's the Japan, it's UK, Australia, most of the major markets we are seeing the yield is strengthening, or at least they are much higher than the inflation rate, which is again a big negative for the market in the long term. So Japan's GDP contracted by 0.2% in quarter one. So it contracted, it declined by 0.2% in quarter one. Why? Because exports fell. Of course, most of the countries will see their export fell due to all these import duties imposed by US, and that will have a lag effect also. All the supply chain disruptions will happen. Again, so Japan's 30-year bond yield rose to 2.96, highest in 25 years. Okay, so this was highest in 25 years. Similarly, 40-year bond yield reached to 3.45, highest since its debut in 2007. So you have seen in Japan also experiencing this bond yield rising. Okay, so the Bank of Japan is also tackling this issue of debt. They have the debt to GDP ratio of almost around 250%. And if the yield is rising, servicing this debt could be an issue. Okay, the if the yen strengthens further, the yen carried rate, what we have experienced in last June. So basically, what happened in yen carried rate? The large investors they borrow in yen and they invest in other markets, including US, for the high return. That so most of the global fund, Japan is flush with fund. Most of the investment globally, including US treasuries, has been funded by Japan. So if that carry trade is unwinding, that will again pose a risk to global market. Similarly, bond yields are rising in UK and Australia also. So overall, the impact on the global market is that there is a growing pessimism about the global economy's growth momentum due to the impact of the US strategies on to change the narrative from or the shifting of the manufacturing to US, creating jobs, and then weakening of dollar. That will have a negative impact on the global economic growth momentum. These import duties could affect the market over a lag, 1 or 2 quarter lag. There's a lot of supply chain disruption is happening. Already you have seen that Trump has issued a statement that he is asking Apple not to manufacture mobiles in India, but ship it to US. So this will have a lot of supply chain disruptions, causing most of the companies to wait and watch what to do, whether to invest or not invest. So overall, global market are likely to remain under pressure in the medium term. There is no trigger as such, and the commodities, especially the precious metals, like gold, silver, uh, platinum, palladium, those are probably should do well over a period of time. Okay, I'm talking about long term, say 1 year or so. Short term market will be volatile depending on the Trump statement. All right, so just next moving to the next slide, we'll talk about the Indian economy and markets, what happened to India over the next 1 month or so, for the past 1 month, and this impact on the market. So for the last 1 month, India has seen war with Pakistan. So a lot of use of a drone and other missiles. So we will see.
Praveen, sir, sorry to disturb you. A
Yeah,
little louder, maybe your sound is coming a little way.
sorry. Yeah, yeah. So overall, we have seen the war with Pakistan. So we believe that the spending on defense should increase over a period of time. India has no other option but to spend more on defense. Focus on manufacturing and trade will be given in the next few years down the line. Other thing happen is that on the economic front is that India's trade deficit in April widened to 5 month high of $26.4 billion. It was 21.5 billion in March. It widened to $26.4 billion. Why? Because export increased by 9%, but at the same time, import increased by 19%. But again, this is for the month of April. We will have to see whether the trend continues in May because of the trade restriction, trade negotiations on different fronts. So we'll have to see whether the trend continues or India improves its trade deficit. India is also pursuing many bilateral trade agreements, as I discussed with many Middle Eastern countries, including Oman, which we will see in the next month or so, with US, UK, and Europe as well. Some of the positive things for India was that inflation is a 6 year low that you will see in the next slide. So inflation in India is currently 6 year low. Crude is 4 year low. Crude basket of India is 4 year low. Sharmili, am I clear now?
Yes, sir, much better. Maybe the mic needs to be a little bit more close to your collar mic or something.
Okay. Okay. So yeah. Uh, Coming back to the crude is at 4 year low now. RBI probably gave a surplus dividend of almost around more than 2 lakh crore. So this figure should be 2.5 lakh crore to government. So government's kitty will improve and then fiscal deficit will be under control. So these are some of the things which are positive. Inflation, crude and RBI surplus and the trade agreements are positive for India. Now, coming back to inflation, uh, inflation, as I mentioned, inflation is a 6 year low, 3.16% retail inflation. Okay, so inflation has been going down since October when it reached 6.21%, and now it has been going down continuously, and it is now 3.16 in April. Similarly, in the next slide, I will show you the wholesale price inflation. So this is the producer's price inflation, which whenever you buy something in wholesale market, wholesalers inflation is there. So it is again from October to February.
Hello,
It may
Mr. Pravin sir.
yes.
Just can you back to the slide? I can't. You have मतलब आपने बहुत जल्दी कर दिया आगे. थोड़ा मुझे एक बार देखने देंगे क्या वो
Okay,
इन्फ्लेशन का
okay,
जो
all
आप
right.
दिखाते हो.
Yeah, yeah, yeah. So the point was here, the inflation is going down consistently. It reached 6.21% and 3.16% in April.
ओके सर, ओके, थैंक यू।
Yeah.
तेरे पाटा ही है ना
So,
भैया से तो
so moving to
और
the
सही है।
wholesale inflation, the wholesale inflation
हेलो
is again going down. It was in the 2.36, 2.37% range since October. Now it has gone down dramatically from 2.38 in February to 0.85% in April. So we can comprehend the data in both ways, positive as well as negative. Positive is that the lower inflation rate could probably spur consumption. People will spend more as the prices of the products are not rising dramatically. The people will spend more on the consumption. But at the same time, why inflation is going down so dramatically? Maybe it is basically there is no demand. Again, we'll have to see the trend for the next month or so. If really there is no demand, that's why inflation is going down. Supply is stable, but there is no demand. We'll have to see that. So it is both ways, positive as well as negative. We'll see in the next month or so, or June month. Okay, now let us do the sectoral analysis. The impact of the all these trade negotiations happening on the different sectors of India. So first, defense sector. Oh, you must be knowing the why I am discussing about defense sector. We have experienced a war which we could never thought of, and India will focus to improve its defense capabilities over the next few years. India has no other option but to improve its defense capabilities. So overall, the drone makers and the defense shipyards they may get prominent orders. So we have seen over the last 1 week or so, many of the shipyard makers, the stock has increased. Cochin Shipyard, Mazgaon Dock, etc., etc. Their stock has increased a lot. Why? Because the market is expecting they should get good orders, and then their revenue and profitability should improve over the next few years as India showed up its defense capabilities. So overall, defense shipyard outlook is bright due to strong order book, favorable policy framework from the government, and indigenization. That is the most important fact. Make in India and indigenization, and substantial investment from the government. So these are some of the elements for the sector. So there's a Defense Acquisition Council, and they have approved some orders worth 9 lakh crore over a period of FY 22-25. So these orders are probably being given in the next few years during the FY 23 to FY 28. And this 9 lakh crore is basically almost 3.5 times of the last 3 years. So you can imagine the amount of investment that has been done in the shipyard makers. So this is expected to translate into significant orders during till FY 28. But then again, the point is that government is doing capex, companies are getting orders, but we will have to see the valuation, whether the valuation is correct or not. Normally, what happens in many cases, as soon as the company gets order, stock goes up, and the stocks the next 3 years revenue and earnings are priced in the current stock. In those cases, you won't get good returns from those stocks. So just because the companies are getting orders, it is not necessary to invest in those stocks, but we'll have to see the valuation. Next, we'll talk about the steel sector. There was talk about the India-US deal, trade deal, but then suddenly the narrative changed from both the sides, US side as well as from Indian side. Now, India proposes to impose duties on certain US products in response to US duties on steel and aluminum products from India. So India is also getting tough with US. This is coming at a time when both the countries are negotiating a trade agreement. That is somewhat a bit of a negative news for the India regarding trade negotiations with US. So these duties could affect almost around 7 billion worth of import from India. And similarly, the equivalent amount of duty from the US. So this 7 billion worth of import from steel and aluminum seems to be a slightly big amount. But then again, we'll have to see over a period of time how it goes. Just because the news has come, we won't. Basically, steel and aluminum is a domestic market in India. So Indian companies, they have large market in India, and as India is expanding in infrastructure capabilities, we require a lot of steel and aluminum. So I don't see any much impact on the Indian domestic companies like SAIL and Tata Steel, etc. But then we'll have to see how it goes. Next is the pharma. Pharma sector, some of the important events has happened in the last 1 month or so in the pharma sector. So US is planning to reduce prices of prescription drugs by around 30 to 80%. That's a big percentage, 30 to 80%, to make it in line with other OECD countries like developed markets. See, drug prices in USA, they are much, much higher compared to many of the developed markets. So now new US government wanted to reduce those prices. That will impact many Indian pharma companies. Now we will see. So US, normally Americans pay over 3 times of the branded drugs as what they paid in developed markets. So prices in America are 3 times higher than in many other developed markets. So the American plan to reduce the prices by 30 to 80% will have two kind of impact on India. First is that the MNCs, many multinational companies like Pfizer, etc., about Pfizer, they may raise drug prices in other markets, including India. Since prices of US will be low, these companies will have to increase the prices in other market to make it at least to some respectable par with the US markets. So Indian pharma prices could increase in India, manufactured by MNCs. At the same time, Indian pharma exporters, they are expected to face pricing pressure in the US. Since they have to reduce the prices by 30 to 80%, many of the companies like Sun Pharma, Glenmark, Magenta Pharma, they could experience pricing pressure. These companies have sizable branded business in the US. Similarly, generics market could also come under pressure in the medium term. Just to give some data points, India supplies almost 50% of the generic drugs in US, which is the largest market for the Indian pharma exports. And Indian companies exports pharma products worth almost around $10 billion. So you can imagine the figure. It is almost around 85,000 crores per year. So in a way, this move would be beneficial to US patients, Americans, but that will cause a uh, recalibration in most of the emerging markets, including India. And since the US companies, they could exert pressure on the companies like countries like India, and then companies like Sun Pharma, etc., to tighten their patent laws. Okay, so normally in emerging market, patent laws are not as strict compared to US markets. So they could force the Indian companies to raise prices and tighten their patent laws. So that is a big, slightly negative for the pharma companies. And anyway, pharma exporters probably could face a rough weather going ahead. A lot of volatility will be there in their prices. So I, rather than having a generic player in the portfolio, I would prefer CDMOs, companies in the niche segment, companies focusing on the domestic market, etc. Now let us focus on the banking. We have been saying in the last a few webinars that we prefer banks, especially the private banks. And then private banks have done really well compared to other sectors like auto or IT, etc. So just talking about this quarter's earnings. So there are around 12 public sector banks, PSBs, public sector banks. They have posted a revenue of 1.78 lakh crore, which was in FY25, which was up almost 26% compared to last year. Uh, However, we believe that in FY26, these companies, PSBs, may come under pressure. Their NIM could be under pressure, and their return on assets could be slightly moderate. So if this happens, those PSBs won't get a very high valuation. Whatever the valuation they got over the last few years, probably that is has been peaked down. Overall, we see the moderation in their ROAs, in their NIMs, net interest margins, and their valuation should stabilize over the long-term average. So large banks like SBI, Canara Bank, PNB, they have already lowered their net interest margin expectations. They have said that NIMs will be under pressure for FY26. And then we believe that their returns on asset to moderate to around 1.1 to 1.2%, which was, and the peak was almost 1.3% in FY24, FY25, which was a two-decade peak, you know. So for public sector banks to achieve ROA of 1.3 beyond 1.2 is slightly a very horrendous task. They are normally around 1 to 1.1%. Overall, going ahead, their returns will be as per their ROAs, as per their NIMs. So return will be moderated. The one good thing about the public sector bank is that for the entire banking sector, 45% of their total loan are linked to external benchmark like repo, like RBI repo rate. This is slightly technical. I think some of you may find it difficult, but total loan of the entire banking sector, 45% is linked to repo rate. So these are typically repriced rapidly after rate cut. And we believe that the RBI is likely to cut rate in June 6 policy meet. So this 45% of the loans will immediately be repriced. Repriced in the sense their rate will be will go down, and that will impact the NIM of bank, including private banks. So 45% of total loan are linked to external benchmark like repo for the entire banking sector. But for PSB, it is just 35%. So PSB's repricing will be less than the private banks. So their kind of a NIMs will be under pressure because of the lesser credit growth, but it will be protected because of the lower percentage of loan linked to external benchmark like repo. So as I mentioned, we expect the RBI to cut rate in June 6 policy meet by 25 basis points. Because in India, inflation is very low and we have to give some stimulus. Otherwise, the consumption will be down. Why the NIM will be under pressure? Because many of the PSBs, they have guided lower credit growth. Overall, we expect the credit growth to be around 12 to 14% for the entire banking sector, but many PSBs will see a lower credit growth than the average of the banking sector. SBI expects to be around 20 to 13%, Canara Bank 10 to 11%, PNB 11%, 11 to 12%. So which was lower than FY25 rate. All right, so a transmission of rate cut on the asset side is slower for PSBs that will protect their NIM, but credit growth is lower than the industry average. That will affect their NIM. So overall, their NIM will be under pressure. Overall, so talking about the private bank, we expect the reasonable credit growth around 14%, translate into decent earnings growth momentum for banks in FY26, especially private banks. So we still believe that the banking sector could be on descent bit at this point of time. I mean, it won't give you multi-bagger returns, but it will protect your capital. It won't go down much. And we believe that the market will be very, very volatile going ahead. Now, what's happening to domestic consumption? So gradually, we thought that the domestic consumption should improve going ahead, which is improving. But again, compared to the previous 2 quarters, it has not improved dramatically in the March quarter ended. Still, there is a financial stress. No, we believe financial stress is bottoming out. And commentary from the FMCG companies like Britannia, etc., is slightly positive. They have said that demand for staples is improving. The other aspect is that the low inflation, very, very low inflation, could trigger consumption uptick. So we believe that the monsoon could be good. So in the next 1 or 2 quarters, consumption should pick up. There won't be any high growth in consumption unless we see the income growth to rise in India. Now let us look at the earnings growth for the last quarter, that is Q4 of FY25. Earnings environment continues to be weak, not a very sharp growth in earnings. So Nifty 50 EPS grew by just around 4.7 to 5% in last quarter, in quarter 4 of FY25, which is the slowest growth since 2017. Consumption and capex are still lower from the government side. Capex low from the government side, consumption from the general public is also lower, though it is recovering, but the pace of recovery is not that strong. Maybe after the monsoon, we should expect the capex from the government and consumption from the public to improve, which will which will be seen in the earnings of the companies. So overall, first quarter, June quarter earnings of the companies should be moderate. We don't expect dramatic improvement for the company's earnings to grow. Overall, bank still looks cheaper or relative to IT and consumer. At least bank have a visibility. 12, 13, 14% earnings growth and 6% GDP growth. We still see some good decent growth in banks. Overall, in the banking segment, NBFCs, large NBFCs are a better bet. Affordable housing theme looks good. So FY26 Nifty 50 EPS is likely to grow by around 5 to 6%, not more than that. Again, but in during this volatile time is a good time to build portfolio. Whenever the market goes down, you should try to invest in good companies with a long term visibility, good management. Yeah, in the June quarter, what is going to happen is that many of the exporters they might report their very good numbers. Why? Because of the 90-day pause, there's a lot of huge rush for the imports in US as inventory is stocked up because no one knows what is going to happen after 90 days. Even market is not aware what's going to happen after 90 days, whether the Trump will continue with this pause, will continue with the same rate, or rate will go down, rate will increase. We are not sure. So many of the exporters from India and then importers from US and anywhere from around the world, there has been hedging activity. So many of the exporters they could see good June quarters, but that shouldn't be taken as a long-term trend. It might get impacted positively in the stock prices, but again, as I mentioned, this could be an opportunity to exit some of the uh, some of the stocks where you are probably been holding up the stock since long. The overall outlook for the market and valuation is that India's current valuation of around 18.5 times is same as 10-year average. So valuation wise, we are probably much better now compared to the past few months. But again, valuation shouldn't be looked from the perspective of a PE band only. Valuation should be looked in the context of earnings growth, interest rate in the economy. because interest rate affect the valuation in terms of DCF, in terms of the cash in hand now versus the cash in hand 5 years hence. So earnings growth is weaker than the 10-year average. That is why the valuation is come down. If your earnings growth is weaker and then valuation is high, that is a recipe for disaster. But in India's case, I mean, the market going down was a good thing. So valuation are now comfortable. Whenever the earnings growth pickup is there, probably we could see a good recovery. We need a strong monetary and fiscal stimulus from the government side to boost consumption and hence earnings growth. As I mentioned, RBI is likely to reduce a rate in the June policy meeting. That will give some monetary stimulus. From the government side also, some bit of a stimulus is required to boost GDP growth, to boost consumption, and hence the corporate earnings growth. Overall, market is expensive. If you look from the earnings growth perspective, 10-year average, it looked decently placed. To make double-digit return from the current level in the next 1 or 2 years seems to be a difficult bet because if the earnings growth is not happening, probably that won't support the market going up. There is no trigger for the market right now to go up, to go dramatically up, or go dramatically down. Market is just wait and watch. But in some pockets, they like for example banking, we are seeing some action. So market is basically is a stock specific or sector specific action will be seen in the market. Many of the stocks which are done well, those will see good action, but I don't expect any broad-based market outperformance in the next few quarters or so. It will be rather a range bound, maybe 2-3% upside from this level, and then 2-3% downside from the current level. Not much of a downside and not much of a upside. Probably it would be a good market for the traders. And in few of the pockets where like defense, etc., those have been holding up the stocks and if they trapped in the with high value, the high price, the current prices could be an opportunity to exit some of the stocks. So I think I am at the end of my presentation, but I just wanted you to just focus or just be aware of some of the things what's been happening in the market. Be aware of the narratives that has been spread in the market. We have seen over the last 4-5 years that the section of the market is driven by narratives. Narratives like China plus one, where in the narrative was most of the chemical companies will be benefited because of the China's supply chain disruption after COVID, and then Indian companies will benefit. That is not the case. Companies whose business model is sound, companies whose products are they have a niche. Those companies will do well. Not all the companies. So it is not a general statement. We need to focus on company specific factors, not the general narrative. The narrative about the battery chemicals, like semiconductor chemicals, like battery energy storage solution, like India benefiting because of high tariffs on China. Just last 1 or 2 months, there was this narrative was there. Since there was a high import duty imposed by US on China, India will benefit. India will benefit, no doubt, but it is not on a general level. Some companies who are very, very sound in their business model, they will benefit, but not all the companies. Now, as I mentioned in the past, Trump asked the Apple not to manufacture iPhones in India. Are the assemblers or the companies who have invested in in this manufacturing? What will happen to those contractors? That will affect them, right? So we have to just be wary of those things. And these narratives are very, very short term. It might change in the next month or next 2 months or so. Just be careful about this. Invest in sound companies with good business model and with a long-term focus. And whenever the market goes down drastically, just focus on building up your portfolio. So I will just brief you about the technical analysis. This is the technical analysis done by my team. So I will just give you some ranges about the market, about these different segments. Just briefly talk about this. So Nifty 50 weekly. This is Nifty 50 weekly chart. So overall, we have seen the demand zone is around 24,000, and we expect the market to reach by around 25,800 to around 26,000 level. This is the resistance of the market. Okay, so the market will be in that range. As I mentioned, you the market is a range bound. Market will be in that range. Now again, this Bank Nifty weekly. So Bank Nifty has been doing well. We have seen some large green candle over here. The support is 53,000, and then Bank Nifty is expected to reach at around 58,000 roughly. And of course, the large bank will be the prominent drivers of the Bank Nifty. Nifty Reality Index. This is very interesting. So this technical, I'm talking about short term. Okay, don't just go with the chart on the long term basis. Nifty Reality Index, we have seen it was in a downtrend since July, since May 2024. It was going down till Feb of 25, and now since the last 3 months it has been consolidating, and we have seen some sharp uptick in the prices of the Nifty Reality. So Nifty Reality should do well over the next one or two months or so. And then we believe that it should reach by around 1,000 to 1,050 levels. Again, PSU banks weekly, this weekly chart, falling trend line. As I mentioned, private banks should do well, but PSU banks will be range bound. They have been declining trend, though they are breaking out. They could break out. We could see some rally in PSU bank, but it is a short-term rally. It is not a long-term rally. Probably you can lighten up your portfolio in PSU bank during this rally. Nifty Oil and Gas Weekly. Again, Nifty Oil and Gas Weekly was a downtrend since the last August until March, and since March and April, it has seen the upward momentum. So oil and gas, we could see a rally of around 8 to 10% is expected going ahead. Almost around the 12,000 to 12,500 is on the card in Nifty Oil and Gas. And the Nifty Energy Index, this is the weekly chart. Again, this index has seen downturn since October. Now it is recovering after falling to March lows. Again, we could see Nifty Energy Index to move around 5 to 8% over the next few months. So these are all short-term targets I'm giving you, not for the long term, and it is more mainly for the traders. You should know when to exit. That is more important. Otherwise, many of you will stuck up in the stocks. Nifty Defense. Many of you must be having Nifty Defense. So Nifty Defense was on a downtrend since last 6 months or so. Until March, it has seen the bottom. Since then, it has been recovering. And now, after the India-Pakistan war, it has seen sharp rise. I think we advise profit booking in most of the stocks at this level. Once the tension goes down, the stocks will also likely to see price correction. So we suggest you can exit the stock if you are making some profit. So that's it from my side. Now we can open the floor for question and answers. Thanks for
Praveen
patiently
sir,
listening.
Praveen sir,
Yes.
sir,
Yes.
just can you brief me the starting 5 minutes? I could not understand what you told me. The starting 5 minutes of the presentation, as the presentation has been end. Can you just brief me the starting 5 minutes of
Starting,
the?
it was mostly about the US markets, right?
Okay,
So
just
you
brief me. Okay, just for
Yeah, okay,
two
okay.
in
All
two
right,
three
all right.
lines if you can. Okay.
Sure, sure.
Okay.
So I talk about the global economy, and I talk mostly about the positive factors in my first slide. Positive
Okay.
factors was that US China, they are discussing, they are
Okay.
negotiating the trade agreements. US UK has signed trade agreement. Similarly, US Saudi Arabia signed
Okay.
trade deals. US has secured 600 billion investment from Saudi Arabia and other Middle Eastern countries. US is signing trade agreements with other Middle Eastern countries. So yes, US is on a spree negotiating trade agreements from everywhere and seeking investment from across the globe into the US to shore up their manufacturing and ramp up their uh, employment capabilities. On the other hand,
Okay. Yeah.
India is signing agreement with
Mm.
UK, US, Oman, Middle East countries. Russia, Ukraine, they may see the conflict ease. So in the short term, economic impact could be positive. This is positive aspect. Second slide, I talk about the negatives. What is negative? Negative is in the bond yield of the major countries like US, UK, Australia, Japan. Bond yield is rising everywhere. 10-year bond yield in US is almost 4.53%. Now it has come down to 4.47, I guess, yesterday, but it is around 4.5%. So bond yield gives you the clear picture. Bond will gives you clear signal rather about what's happening in the market. So so market participants are worried about the US ability to serve their debt. Yesterday, Moody's downgraded US rating from AAA to AA1. That is a big thing for the US market. Moody's downgrading for the first time in its history. US rating. We can imagine the rating downgrade
Okay.
from the countries like emerging market or Latin American market, Asian market. It is okay, but downgrading US is a big thing. Okay, so
Okay.
this is all about trade. I talk about the Japanese.
सर
Similarly,
जस्ट बिफोर ट्रेड सर लास्ट वाला जापान वाला मैंने देखा था जस्ट उसके पहला हाँ
okay,
जस्ट लास्ट थ्री
okay,
पॉइंट्स सर लास्ट थ्री पॉइंट कैन यू ब्रीफ मी लास्ट थ्री पॉइंट्स
okay.
या
So yeah, my point was that so as
द
trade
रेट
deals are
कट
being
वाला
negotiated,
ओके ओके
yeah, okay. So as trade deals uh, are being negotiated everywhere, uh, and then geopolitical uncertainty is there. The Fed is not yet sure about to go ahead with the rate cut or not. So there is a lot of pressure from the US government on the Fed to reduce the rate, which will help them to refinance their debt, which will help them to uh, ramp up their economic growth. But then Fed is very, very cautious because the yields are rising and then Fed can't do much about yields. Yields are controlled by the market, not by the Fed. So
Absolutely,
the
sir,
Fed is
because
not,
FED was Fed was opposing also. The director was also opposing
yes,
for the
yes,
tariff. Yeah,
yes,
yeah, yeah, yeah. And the last
yes,
point, sir, the last point only. The despite the trade trust wala.
yeah,
USD
okay,
resume.
yeah. So the trade negotiations are happening, that is positive thing, and yields are higher. So now, logically, USD should strengthen. USD should strengthen, but USD is not strengthening. USD is declining. Why USD is declining? Because the global investors, they are concerned about the ability of the US to get its debt in order. Okay, so
Okay, okay.
I hope this is clear now.
Oh, now not sir, now done. All okay. Because after that, the Japan wala I have seen from that. Okay, sir.
Okay,
Okay. Thank you, sir. Thank you. Thank
all
you.
right.
Okay.
Thank you
Okay.
everyone for patiently listening. Now we can open the floor for uh, question and answer.
Praveen, so we will be taking the question answers in the chat first. If you could
Yeah,
want me to repeat or is it- first question was on IDBI disinvestment and JNK Bank for investment.
everybody. Let's listen on IDBI Bank. Okay, IDBI Bank, this investment, as far as I know from the public domain, it is progressing well. And the secretaries have said that the September is the target. Uh, so let us see. I think it is progressing well. The as per the media news, the due diligence is going on, or probably it is on the last stage. So it should happen.
Sir,
JNK
what
Bank,
about
sir.
NPAs of IDBI Bank?
Sir, whoever is questioning, please don't do it. So we will first take the chats because people has been mentioning there. Let's address all of them. You can put your query on the chat.
Okay. Now, just since you have raised the question, I'll just quickly answer. IDBI Bank has write-off and then taken care of their NPAs very well in the last many years. So now their book is very clean. So whoever is the buyer, he will get a good new sophisticated IDBI Bank. IDBI Bank's profit for the FY25, that is the year ended March 25, was almost around 7,500 crore. So IDBI Bank overall is doing well. Next question is on Jammu and Kashmir Bank. Jammu Kashmir Bank is a very localized bank, not much of operations. That is why the market is not giving them a good valuation. The book value is 120, 130, I guess, and then price is around 100. The question is why the market is not giving them good valuation is because their ROE is okay, but their uh, uh, the presence is in a very small market, like mainly into Jammu and Kashmir and then surrounding areas. So the market won't give them a high valuation.
The
Let me take the
next
next
is
question.
on BOM and IOB Bank.
Okay, Bank of Maharashtra and IOB. Okay. Okay, as I mentioned, the PSB banks, their rally is mostly done. But in that sense, Bank of Maharashtra is overall doing well. ROE is Bank of Maharashtra is more than 20%. That is why the price is around 20 and 51, which is I think around 1.4 times of the book value, which is higher than the for many PSPs. Overall, Bank of Maharashtra is doing well. Anyone is holding the stock, probably you can continue holding. Dividend yield is also nice. I think it is around 3% or so. So yeah, one can keep on holding the stock. And next is on the Indian Overseas Bank. Indian Overseas Bank, I think it has been going down. Not much of a story in Indian Overseas Bank. Uh, Already valuation is very high. Its ROE is not that great compared to Bank of Maharashtra. Its ROE is around 10 to 11%. Uh, I won't give 2 times book value to Indian Overseas Bank. I mean, this is the good price for order to exit the stock. If you see some rally now, as I mentioned in my technical presentation, we can see some rally in the uh, in PSBs. So one can look to lighten up portfolios in PSBs like Indian Overseas Bank. Next
Next
question is
question
on.
is a request to post list of some ancillary defense stocks in your Telegram channel. Next week, if you could post some.
Sorry, what is the question? The post?
Some to post name of some ancillary defense stocks
Okay, in our channel, Telegram channel.
in your Telegram channel.
Okay, that will do. That will do tomorrow. I'll ask the team to post.
Yes, so thank you. And next, there was a request for the PPT. We will address it for all. This
Yeah.
webinar would be posted in both IDBI Bank as well as IDBI Capital Markets YouTube channel. You can revisit it. Sharing of the PPT through email won't be possible. Next is whether it is the right time to book profits in defense.
Yeah, as I mentioned, in many of the defense pockets like Cochin and Mazgaon, etc., this is the right time to book profit. If you are generating profit, I think you should exit the stock. Market will be volatile. You will get an opportunity to buy the stocks again. So I think whenever you earn profit in such companies, yes, you can lighten the portfolio. You can look to exit the portfolio, or at least partially you can exit the portfolio.
The next is they're asking for your suggestions for some stocks which are good for the long run.
In the long term, in view of the current present scenario, we are positive on the private bank space. We have been positive on the space for the last a few months, and again we continue to remain positive on the private bank space. You can look to invest in large banks like ICICI, Kotak, and then SDFC, etc. Just avoid names like IndusInd where there is a lot of problems. Even Yes Bank is getting acquired by Japanese Sumitomo, but Yes Bank has the valuation is slightly higher side. You can see some, but overall the lot of activity will be in Yes Bank. So if you see the portfolio construction, you can look at the large private banks. Consumption is a good play, but probably the story will take some time to play. At this point of time, I believe the domestic private bank is the right bet. But again, whenever the market is volatile, you can jump in, not at the current valuation.
The next person has asked for suggestion on Kotak Mahindra Bank. I suppose you've already
Kotak I
addressed.
already discussed. Kotak looks
Yeah.
good, and then one can look into it.
Next query is would like to know about future of CDMO or CRMO space and AMC related stocks.
Yeah, future of CDMO, I think CDMO is very interesting space. CDMO uh, could be a good play for the next many years. See, despite all the talk about the pharma prices and etc., many of the US companies they will look to outsource their research and then development abilities to many of the Indian companies. They have developed a good skill set, good niche technology in this space, good knowledge base in this space. So I believe that the many of the players in CDMOs they are developing very well. So one can look at those companies during the market correction and build the portfolio in those stocks as well. AMC related, AMC, probably AMC, if you have long-term horizon only, one can look at the AMC stocks. Otherwise, the I don't think the return from the market will be that great. So that will impact the many of the AMCs in going ahead. Whatever the my point is that whatever the peak was that we have seen the peak. Now it should stabilize. So return should also be stabilized. I'm not saying that the AMC is a bad investment. AMC is a decent investment, but don't expect very high returns from those stocks. Now it will be very normalized returns on the AMC stocks. But in CDMOs and CDRMOs, etc., those could give you an excellent return provided your company is good. You select a good company.
Sir, a request for posting the link of Telegram channel. So if it could be in the shared in the chat for all, the link of the Telegram channel of ICMS. And
Okay, I'll let us see that. I'll see
you
at the
will
end.
ask, we will ask the team, Jaya and all, if you're there, please share it. And next is whether it is right time to book profit on ICICI Bank or one should be holding the stock.
One can continue to hold ICICI Bank. ICICI Bank is doing very well. And overall, I believe this stress in the banking system that we have been seeing, it will bottom out. So don't expect a very good return over the next few months, but it will protect your capital and it will give a return once the stress is started to improve.
Next query is very specific on few stocks. Valiant Organic buying price was 900. What should be done now? Orient Green Powerhouse brings price 26 rupees. Salsa Technology 28. Please suggest.
Okay. Valiant Organics, the company was reporting losses for the last 4 or 5 quarters, and now in December quarter, the company has reported profit. It's a very small cap company. I think almost around 1,000 crore market cap. Overall, the company is good. You can continue to hold the stock. I don't see any problem. The company is turning around at this stage. So one can look at the stock. One can hold on to onto the stock at the current price.
Salsa
सर
Technology.
सर सर प्लीज मैं प्रताप पंडा आपसे बात करना चाहता हूँ। वो जो वैलेंट ऑर्गेनिक्स है आपके तरफ से दिवाली पिक दिया गया था, उसको 900 में हमने खरीदा था।
हाँ, तो ये स्टॉक अभी आप होल्ड कर सकते हैं। ये अभी
और
टर्न अराउंड हो रहा है। अगर लॉन्ग टर्म आपका कैपेसिटी है तो होल्ड करके रखना है इसको।
कब तक आ जाएगा सर, थोड़ा आपको सजेस्ट करेंगे, क्योंकि वो लॉन्ग टर्म हो गया, बहुत हो गया, 2016-17 से खरीदा हूँ उसको। 2017 दिवाली पे थी।
अच्छा, 17 का था, ओके। अभी इसका क्या 4-5 साल से, 4-5 क्वार्टर से कंपनी लॉसेस ही कर रही थी, 4-5 क्वार्टर, बिकॉज उसके पहले कंपनी का परफॉर्मेंस बहुत अच्छा था। अभी 4-5 क्वार्टर से
ठीक
लॉस थी, अभी अभी से इम्प्रूव हो रहा है इसका। तो थोड़ा सा
ठीक।
इस वीक भी थोड़ा सा इम्प्रूवमेंट था कंपनी में।
तो अब होल्ड करना पड़ेगा कितने, और 2 साल या 1 साल करना चाहिए?
शायद 1-2 साल आप होल्ड करके देखना, मतलब जो आपका प्राइस था वो कहीं उसके आसपास तो आना चाहिए।
ठीक ठीक है सर। और ये साल्सर और ओरिएंट ग्रीन।
ओरियन ग्रीन,
जी सर।
और कौन सा था?
साल्सर टेक्नोलॉजी।
ओरियन ग्रीन आपने कितने में लिया था?
28 रुपीज।
Okay. ये भी इसका भी कंपनी का रिवेन्यू एंड अर्निंग्स बहुत वोलाटाइल है।
उस समय आपका जो भुवनेश्वर में जो बैठते हैं वो भी मेरे को एडवाइस किए कि इसको खरीदो, अच्छा है, ग्रीन पावर है। उस समय मार्केट सही था, खरीद लिया, अभी पूरा डाउन आ गया।
हाँ, बिकॉज अभी 2 क्वार्टर से लॉस भी दिखा रहे हैं, मार्च क्वार्टर में भी लॉस किया, दिसंबर क्वार्टर में भी लॉस किया। इसमें टाइम लगेगा आपको, इसमें इसका फिर भी इसका वैल्यूएशन भी ज्यादा है, 50 का पी है इसका। बट आई थिंक ये स्टेबलाइज होगा इस रेंज में,
तो
स्टेबलाइज
मतलब
होके ये अभी।
कितने वो?
So the view is on hold, sir, on all the stocks suggested by you. We need to move on next. TCS is the next stock, sir.
व्यू इज होल्ड, यस।
साल्सर
साल भी होल्ड करना।
मतलब
टीसीएस
टाइम पीरियड सर?
1-2 साल तो होल्ड करना पड़ेगा।
1-2 साल।
Okay, so next is TCS.
TCS, sir.
TCS, yeah. Overall, I'm talking about IT sector. IT sector, for the long term, we are not very positive on the stock. One can look to exit in any rally. At least some of the part of the portfolio they can eh, lighten up. They can reduce the portfolio. So don't expect too much of a growth from the prominent large IT stock like TCS. So we expect the portfolio to be reduced, at least by half, if you're not comfortable with exiting the full.
The next is view on power sector ancillary and railway ancillary stocks.
The power sector ancillary, we are very positive on the power sector ancillaries, because the government capex is happening, and then the data center AI theme is playing around. So power sectors we are bullish, but just look at the valuation. Narrative is playing around, and then some valuation is very very high in some pockets. But again, so when market goes down, one can look at these power and in same view on railway as well.
Next is Gensol, sir.
Ginsol, I guess, is complete avoid. Don't invest in such stocks where risk is high, management quality is questionable. I would suggest not to go into such stocks. Might go up, someone might buy it, but then again, it's hope story. You are investing based on hope. This will improve, something really good will happen. So I suggest avoid. There are many, many good stocks in the market.
In one of your slides, it was mentioned that present market valuation is 18.5. Where from to get this information? Which website is available?
So this is not from the website. This we calculate the earnings of the Nifty 50 companies. They have reported the numbers, and we look at the market price, we look at the index, and then we calculate based on our formula. So this is based on our formula.
Mr. Rajkumar, it is a result of research team. So there's no particular website for it. Next question is Tata Steel and Inox Wind book profit or continue? Will book profit or continue? Tata Steel and Inox.
Tata Steel is a long-term player. Should even continue to invest. Demand for steel is very very recent strong in this sector. The government has imposed a lot of duties, import duties, dumping duties on this on export from or import from China and other Asian countries. So government is basically protecting those companies. So nothing wrong in that. So keep on holding the stock, Tata Steel. Next is Inox Wind.
It is
Inox
Inox, sir. I
Wind,
think it is will book. It will come. It is Inox stocks.
Inox Wind, right? Yeah.
Hmm.
Inox Wind is again, I think it's currently consolidating. It has gone up to 250 or so, and now it is 180. Many of the this is slowly of the many of the stocks, but the valuation is slightly higher. Uh, if the if you get a good price of around 200 or 220 or so, I think one can partly exit the stocks for better opportunities.
Sir,
Next
can you throw
question.
some light on Jupiter Wagons and Natco Pharma, sir?
So we are taking the queries on the chat box chronologically. If you can just type in there, we will definitely come to your query. There are
Okay.
people who have put a query before you. So let us go chronologically. So next question is, why is the inflation reducing? Why there is no demand? Wanted to understand the situation. Can you please elaborate?
So inflation is reducing. As I mentioned, it is a good thing as well as it's a positive thing. Supply is increasing and then demand is maintaining. Demand is at the same level. But then I see that the demand is also reducing. That is why the inflation is going down. I don't see very high demand for the products. That is because the consumption is not happening much in India. Again, the wage growth. There are various issues. Again, the wage growth is not that at par with inflation. Maruti Suzuki CEO said, Mr. Bhargava said that only 12% of the population of India they are able to afford entry level car. So you can imagine 88% of the rest of the 88% they can't afford to buy cars. So that's why I mentioned that income level in India are not increasing rapidly. They are increasing, but the rate of growth is not that high. We need to increase that rate of growth to take large number of population from poverty to middle income level. That is why the growth is not happening. That's why the FMCG companies, auto companies, passenger vehicle companies, the growth is not there. Hence, I think that is the reason why the inflation is also is been going down.
Next question is Bell Bicon PPL future.
Well, Bharat Electronics again, defense play. It has gone down, but it is doing well. Overall, it's very good stock. One can keep on holding for the stock. And defense, as I mentioned, is a long-term story. No doubt about it. One can keep on holding the Bell.
Also, is
Bio,
it the right time to buy fresh Bell?
well, I think one can wait if the market goes down and then the narrative sets in. Currently, after the war, Indo-Pakistan war, all the defense stocks are up. They will cool down, and then when the market goes down, they will cool down. Then one can look at adding into stock. Don't jump in at this current price to buy. Next is Biocon. Biocon, probably I'm not very comfortable. Biocon has not given much return over the last many years. So I would avoid the Biocon. And those who are holding, probably after rise, one can look at exiting the stocks.
Is there any good stock to invest in renewable energy, solar?
Which one?
Solar renewable energy. Any good stocks you want?
Solar renewable energy, Wari energy is good, but the problem is that in most of the companies, valuation is very, very high. You won't make good money if you buy at a high valuation, even if the company is good. Remember this point. If the valuation is high, you won't be able to make good money, even if the company is good. Just be aware, just be cautious about all those schemes playing around in the market. I know many of the companies are good, but then just wait for a few more months for the prices to cool down. And there's a lot of competition coming from China as well. And there's a lot of talk about the import duties on solar panel in US, from China, etc. So we'll see a lot of volatility.
The IndusInd Bank outlook in next 3 to 6 months.
Yeah, IndusInd Bank is a crazy story. I mean, not sure what's exactly happening in IndusInd Bank, why the management was involved in all those things. So I would probably, if you are risky investor, one can look at buying at a lower level. But then, why would I buy IndusInd when there are good banks, there are good investments are happening? So lot of unknown, unhidden forces are books are happening in investment bank. I would avoid at this stage and then look for better opportunities.
So there's a query like, in spite of Bharti Airtel declaring good quarterly earnings, still prices fell yesterday. So what is the reason behind that?
Yeah, that is the story of many of the companies, those who report good numbers. What happened whenever the uh, company report good numbers, prior to that, most of the price action is good, so that the uh, good result is already priced in the is accounted in the price. So when the good results come, many of the large investors or the traders, they reduce their holding. Now they know that the result is good, or this is a good price. So many of the traders, investors, short-term investors, they sell the stocks based on the news. That is why the in many cases the stock um, goes down. But again, Bharti is a good stock to own.
Your views on Power Grid, Power Finance, and energy.
Yeah. Power grid, as I mentioned, overall power sector looking well. Power grid valuation is also decent. Power grid is a long-term play. Power grid won't give you multi-bagger return, but it won't go down as well. It is a decent play on the Indian power sector. Dividend yield is almost around 4%, I guess. So keep on holding the power stocks like Power Grid, NHPC, as you mentioned. Power finance is also very good. Power finance valuation is very attractive. It is trading at almost around 1.2, 1.1 to 1.2 price to book value. ROE is also very good, almost around 20%. So one can keep on holding the stocks. Power finance has gone down in the last 6 months, but it should recover. It should recover over a period of time.
Any view on steel stocks, considering that the tariff issue will be resolved?
We should resolve over a broader perspective. But as you are aware, as I mentioned in my slide also, on the outlook on steel sector, India is imposing duties on US steel and aluminum imports. Similarly, US has imposed duties on US on Indian steel and aluminum imports. So both the countries are playing on steel and aluminum. So at the at a global level, both the countries are playing on the tariffs, but domestically the market is good. So tariff imposition by both US and India won't impact much, at least in the medium term, on the domestic market.
The next, your views on Black Rose and Ashok Leyland.
Okay, Black Rose, not much talk about the company. It's a very small company, I guess, almost 500 crore market cap. It has gone down from the 150, 160 level to now currently 100. Company is basically into the chemical distribution company. Uh, Overall, I think company is doing well, but then uh, the growth is not there. One can, if you get good price, say around 110, 120 or so, one can look at exiting the stocks.
Then Ashok Leyland.
Ashok Leyland again is a decent company, good company, but then overall the industry is not growing. That's why we have seen the stock goes down from the last August or so. Now it is recovering. It is a market leader in this segment. So if you are holding the stock, keep on holding. It's a very good company. Ratios are also very good. Currently, we are seeing some industry pressure. That is why the some of the auto companies like Ashok Leyland, they are facing some pressure. But I think it has recovered and it will recover well for a period of time.
The next query, whether to hold Jupiter Wagons, Natco Pharma and HCC.
Jupiter Wagon, technically Jupiter Wagon looks good, and then yesterday only we gave a call of Jupiter Wagon to buy. So we would see some 10 to 12% upside in the stock for the medium term. So yeah, so that's the call on Jupiter Wagon. So probably after the upside, one can look to exit the stock.
Natco Pharma,
Not
sir.
Yeah, not to Pharma is again interesting story. Stock is almost down 50% over the last 9 8 9 months. Company doing well. Company is in the good segment. Return ratios are also very good, but then high valuation uh, affected the market because there was no growth. Now the valuations are also reasonable. Stock is trading at almost 8 to 9 PE. After the consolidation, the stock should improve. It's a long-term portfolio stock. I mean, don't exit the stock at this price. I think we will get some decent price for the next few quarters or few years.
HCC, sir.
Yeah, next is the SCC. SCC, they are looking for turnaround, but then construction companies won't get a good valuation. The story is done and dusted. Overall, the company will see growth, but then it won't see a very high valuation. So, if you have a very, very long-term view, then probably you can keep on holding the stock. Otherwise, if you get some decent return, one can look to exit. The construction scheme is played out, and then valuation and margin expansion story is also being played out. So, there are much better opportunities in the market. And what happened in the construction space, I think this applies to most of the companies. They are killed by working capital cycle and then debt. That kills the many of the small infrastructure players.
Next is Jindal Steel and Power.
Jindal Steel and Power is again a portfolio stock. One can keep on holding the stock. It will give a decent return, as I mentioned. Steel and power sector, domestic India story is doing well. A decent stock to hold, a portfolio stock to hold.
IOC.
IOC, overall the company is good, but then there's a lot of interference from government. Government won't allow all these PSU companies to generate a lot of profit. As soon as they generate profit, the government will come and ask for a high dividend. That is why all these companies won't get a good valuation. One can exit the stock and buy some decent private run company or PSUs like defense companies whenever the valuation is comfortable.
The next is your view on sale, Hero Motocorp.
Yeah. Sale view is same as Tata Steel. Sale domestic story is strong. Sale has seen down cycle, was down from almost 170 to 110, I guess. And now it is recovered and it's consolidating. Overall, the steel and aluminum story is playing out globally. It's a long-term stock. Okay. So one can keep on holding the stock at this price. There's no point in exiting at this price. You will get better price in the next few quarters. Uh, next, next is Hero Motocorp. Hero MotoCorp again is a very good company, almost 90,000 crore, but then domestic auto cycle is on the negative side, is on a declining trend. The valuation wise is decent. Overall, if you are holding the stock from the lower level, one can look to exit. Not much of a story in auto segment except few like other player and commercial autos. Whenever you get good price, I think one can look to exit the domestic auto story like Hero MotoCorp. Yeah, next is Geo
You
Financial.
find Shakti
Yeah, yeah, Geo Finance is again entirely different stock. We don't know what exactly they are doing and what are their plans. Whenever any news comes, the stock goes up. When there's no news, stock consolidated goes down. That's it. So they have tie up with the BlackRock. Again, it's a long-term story. And being a Reliance Group company, we can expect to not much go down further. But unless and until there's some news, there's some revenue growth or earnings growth, don't see much of a return from this stock.
the Shakti Pump.
Next, yeah, Shakti Pump was a favorite of the market for the last many months. In fact, the market cap is 10,000 crore. It reaches peak of around 1,300, and now the stock is consolidating. It is at around 800. I guess the stock won't move much. Valuation wise is also decent, not very high, not very low. So if you're holding the stock, probably one can keep on holding the stock. So basically, pump segment is a long-term story, and then the initially the margin expansion was there. That's why the market gave them a lot of valuation. See, in December or in the 2003, margin was around 8 to 10%. Now the margin expanded to around 25%. I'm talking about operating profit margin. That is why the price has also increased and then a valuation also increased. But at this margin, it will stabilize. So don't see much upside from this level, but not much downside as well.
Sir, ICRA, LTI Mindtree, VATech, WABA.
If you're a rating company, uh, again, not much of a growth. I would avoid this stock. In the last many quarters, the revenue was almost around 100 crore, 100 and 120. That's it. I mean, I don't see any sharp growth in the company. No. When there are many good players in the market, many mid-sized companies which are doing well, I would avoid the stock like this, like ICRA, where in fact industry is growing very slow. Why to invest in companies where industry is very growing at slow rate? NTM entry is again, if you, I would suggest not to buy at a fresh price. As I said, the IT story is being played out, not much capex happening in the US market so that the IT companies can get contract. I don't expect that to happen. So at this valuation, I would again avoid the buying any fresh buys. But if you're holding the stock, probably one can look exit at a good valuation whenever you get good valuation. The stock has recovered, by the way, almost from 4,000 to now 5,000 level. So at around 5,500 or so in that range, one can look at exiting the stock. The next is Vatek Wabag. Vatek Wabag is a good player into the water treatment, 9,000 crore market cap. The stock has not fallen much because the industry tailwinds, industry support, industry boost was much higher. Government, government and the private players are investing in the water treatment business. Uh, it's a very decent stock. Uh, at every dip, one can look to right. It will give consistent return over a period of time.
So whether any update on BSC when it is going to be bonus share?
I need to check that. I'm not sure about this. I need to check that. So probably I can answer tomorrow or so.
Adani Power, Coal India, Gujarat State Petrol.
Uh, it's almost now 12 o'clock. I'll just answer quickly, briefly.
Sir, another 3, 4 only queries are there.
Yeah, okay. Adani Power Generation Company, uh, good stock, but then it won't give a very high return. Overall, a portfolio's company, but then don't expect to generate a very, very high return. It's a utility business, and normally utility business won't get a very high valuation in the market. Current valuation of around 17 is decent, but don't expect the valuation to ramp up from there. Old India is again a very good company, no doubt about it. It's a basically portfolio stock which will give you a very high dividend yield. Dividend yield is around 6.5%. So rather than investing in FD, you can invest in Coal India at this price and then get a good dividend yield. Plus get a decent appreciation as well.
Sir, we
Next is,
still have
yeah,
a couple of things left, like persistent systems of Colgate and Tata Consumer. They are very like Zomato or Eternal to be taken, then Zinc, Vedanta, Chambal Fertilizer. We close it here. We will not take any further queries.
okay.
So I will
I'll
take
just
one
answer
by one.
briefly. Yeah,
Yeah, your
I'll just
Colgate
answer
and
briefly
Tata
about
Consumer.
the, yeah, Tata Consumer, right? Tata Consumer
Yes, sir.
is a very good stock. They are ramping up their portfolio. They are acquiring smaller brands, and they are developing inch by inch. So, mm, uh, company is expanding very well in a well manner fashion. It's a portfolio stock. Probably one can look at entering the stock whenever you get a decent valuation, or whenever there's a correction in the market. It will give a decent good return. Next is Hindustan Zinc and Vedanta. Vedanta, they are looking at demerging their company look into the four companies. I think that is going to happen by September. Vedanta is only for the long-term investors. Company was facing debt issues, but I guess those debt issues they are taking care of. And then by September, by next March, we will see the demerger of the happening. And then since at a global level also, as I mentioned, I am bullish on commodities. So all the zinc, steel, copper, yeah, especially copper. Vedanta is more into the copper as well. Zinc is in silver as well. So gold, silver, platinum, palladium, aluminum, copper, they should do well over the next 2, 3 years. So I believe Vedanta and Hindustan Zinc is a good story playing out. But just watch about their debt level. Chambal was a very good stock. We had given a call on Chambal last 1 month or so, and then post that the stock went up. Uh, I guess the one can keep on holding the stock. Uh, it's a good domestic play rather than the export play. Zomato, yeah, I think Zomato again. Fine, if you are holding the stock, one can keep on holding. I'm not very much bullish on Zomato. They are burning a lot of money. Their sales is increasing overall, but then profit is not growing. It's not growing that rapidly. But then if you're holding the stock, one can keep on holding, expect some decent return, but don't buy at a fresh level.
Covered all.
You think
Persistent HDFC Life.
your voice is not clear.
Am I audible,
Yeah,
sir?
now you're clear. Yeah.
HDFC Life and Persistent. These are the two last companies.
Persistent is a very good company, but we have seen the stock prices down, I think 3 to 4% yesterday because one of the client he has left the company abruptly. So client was a United Health. So that client is facing some criminal probe in US. So that's why the persistent was down. Otherwise, persistent is a good company overall. But don't enter at the current valuation. Current valuation is very, very high at almost more than 60 times P. So I would rather uh, not enter at the current level. And if you are holding the stock, keep on holding the stock. Next, I think HDFC Life.
HDFC Life, yes. That's the
Yeah,
last
HDFC
one
Life
we
is
take. After
yeah,
this, we can request all our participants that they can interact with you in your Telegram channel because
right.
queries keep coming. We have already, reached our threshold time limit. So we look forward to interacting with all of our participants and extremely, it has been an interactive session with all of your cooperation. But this is the last query we will take, sir. HDFC Live. And remaining, like in the chat, you can find already the Telegram channel link is posted. All our customers are requested to please continue your query on that channel where ICMS experts will be replying you. Sir, HDFC Live.
HDFC Life is again a very good company, good management, good pedigree. The insurance sector is growing rapidly. The stock has almost reached its 52-week high. So in fact, it's a record high for the stock price. Overall, good, very good company. If you are holding the stock, keep on holding. It will give a good, decent return. They are getting a market share overall. So I would suggest if you're holding, keep on holding. And if you're looking to add, don't add right now, but just wait for the market to correct. Whenever you get opportunity, and you will always get opportunity. Stock will go up, but it will come down as well. Okay, so don't just go and buy any stock at any valuation. Most important part is valuation. Just wait and watch, and then you can buy whenever the valuation is comfortable. So yes, the HDFC Bank is a good company. It's a portfolio company. One can keep on holding.
So we thank all of our participants once again. We thank Mr. Praveen and ICMS support team. Uh, we look forward to holding such webinar again. Hello. We look forward to further holding such webinar further in future. And this webinar is being recorded and will be posted in the official YouTube channel of IDBI Capital Market and Services Limited as well as IDBI Bank. So you can definitely refer to it. And with this, we close the session of this month. Thanks once again, Praveen sir.
Everyone, thanks for patiently listening. Whatever questions you have, you can always reply on the through email or on through our channel. So I really appreciate you attending the webinar on every month. So really, thank you very much for the support.
Thank you all. And we close the session here.